Hello there, traders. Welcome to today's live stream. My name is John Kibler, Senior Market Analyst here at Blueberry. It is Tuesday, the 25th of February. It is 2 p.m. GMT. Welcome to the live stream. Hope everybody is doing well today. I'm going to be going through the usual stuff. Here we like to talk about sort of the fundamentals within the market. We're going to be talking about sort of playbook for this week in terms of what we're going to be focusing on, what data we should be focusing on, as well as some key charts of interest. As always, I'm going to take you through a little bit of currency strength and weakness analysis as well. So welcome. Hello, Al. Waiting for a good session again. I hope this session is going to be good for you. I'm standing up today, so on the old stand-up desk, so mic is a little bit all over the place, so hopefully you can see and hear me okay. I'm going to be looking up a lot. That's where the stream is today, but yeah, let's go through some of the key important factors that have happened over the weekend, as well as yesterday. I'll catch you up on sort of the fundamentals in the market that have already happened, and then we'll talk about some of the fundamentals that are coming out for the remainder of the week as well. So let's kick it off with the German elections, shall we? Because pretty significant piece of data that came over the weekend. It's significant because it could impact the euro going forward. Okay, so if you didn't know, Germany is the largest economy within Europe. Okay, so there's lots of different economies and countries within the Eurozone. Okay, and the two largest economies within that are Germany and France. Okay, so when you see a lot of data around Germany and France, that's why on the trading economic calendars, you'll often see sort of French PMIs and German manufacturing PMIs, things like that, is because they are really important in what happens with regards to the euro and the Eurozone. So what we've had recently, or over the past few months, is a really sort of political instability going on with Europe. Okay, there were political instability earlier last year, or sort of middle of last year, in terms of France. There was a load of sort of re-elections going on there. We then also had, most recently, the German elections. But basically what happened at the end of last year, the coalition in Germany just kind of split all of a sudden, and then it kind of created this momentum that was to then create the general elections that concluded this weekend. So there was a lot going on in terms of political instability in Europe, but now that is concluded. So could that give a little bit of a boost to the euro going through this week? So far it has, especially against the likes of the US dollar. Who else have we got in then? So we've got Vincent, welcome, hope you're doing well. Ratish, I'm very well, hope you're well too. Eddie, welcome to the live stream. As always, guys, really appreciate all your guys' input as well. So if you have any questions going along, please feel free to ask a question, drop a question in, or if there's any kind of charts that you want me to take a look at, please drop that in the chat as well. So German federal elections, they concluded. Basically there was a change. The CDU are now in power, but the problem in Germany happens quite a lot in Germany is they need to form a coalition with another government to basically take power, and that's what we're seeing at the moment. Now the CDU possibly have to create a coalition with the previous government that was in charge. Okay, so that is the kind of problem that they're having over there at the moment, because no party really wants to form a coalition with the AfD, because the AfD are considered far right, but they were also backed by Elon Musk. They were backed by the US in terms of Vice President JD Vance as well. So quite an interesting dynamic going on in Germany at the moment. But in my feelings right now, political instability has been put to bed, which can be positive a currency, right? If you think about what happened in the UK last year, right, where we had the Conservatives that were in power for 14 years. There was a lot of turmoil around the election. The pound was quite weak leading up to the election. But once the kind of grasp was that Labour were going to be the party that takes over, actually created a little bit of stability in that terms of sort of fiscal policy. And we had, quite a strong pound going into the election and after the election, because there's not that risk there. That uncertainty has faded at that point. Okay, so I quite like the idea of euro at the minute. I wasn't its biggest fan last year. From a fundamental perspective, still not fantastic. German data still not great, but now I've had this change at the top. Maybe we can start to see some positivity there. So could be something to look forward to in Germany. So could be a potential strength for euro. And let's face it, dollar's not doing great at the moment. And what is the proxy that we look for when we look at dollar weakness? It's euro dollar long, right? So that makes a lot of sense to me right now. Hi, Innocent. Hope you're doing well. Hello, Sean, as well. Welcome to the live streams. So what else have we had? We've had retail sales quarter on quarter out of New Zealand. Very positive retail sales here. So previous was 0%, came out at 0.9%. So very, very positive. Core retail sales, big jump, minus 0.6 up to 1.4%. So the RBNZ, they've been cutting interest rates quite aggressively recently. They've come out and said that, inflation is going the other way, really, and they're trying to cut rates to prevent deflation. Doesn't look like deflation's happening all that much because, we've got consumers out there spending. So that was quite interesting, considering if you think about the US's retail sales, where that was the opposite way. So maybe the RBNZ have cut, aggressively for a reason, but might be slowing down the pace of cuts. What else have we had? Really speaking, some CPI data out of the euro area, but it's hard to kind of look at inflation in Europe as a whole. Better off looking at sort of German CPI, French CPI numbers and things like that. So nothing out of sort of the rest of Monday there. We then went on to Tuesday. There's a couple of things that were on my radar going into today. One of those is the CB consumer confidence. Now, just kind of give you a brief overview of what that is, okay, and why we should care. So it is a survey of 3,000 households, and they asked respondents to rate the relative level of current and future economic conditions, including labour availability, business conditions, and overall economic situation. Basically talking about, how confident is the consumer within the market. Now, retail sales last week for the US, or services PMI last week, were bad. The week before that, retail sales numbers were bad. I think that's telling you that the consumer is getting worried in the US at the moment. So if consumers continue to show a lack of confidence, how is that going to impact the stock markets, right? That's going to be something that we need to really keep our eye on, okay? Because stock markets in the US performing poorly right now. They've actually seen a downgrade in terms of the hedge funds have started to de-risk themselves from the Mag 7 at the moment, which is, again, pushing prices lower. Because if the whole world thinks that hedge funds are not buying into the Mag 7, why? And you can see a little bit of pressure selling from that. So this is going to be an important figure that I think we need to really keep our eye on going into today. CB consumer confidence coming up in around 50 minutes or so. Going into Wednesday, so Aussie CPI, again, this is going to be very important to the market. Reason being is because the RBA last week came out, they cut interest rates, right? But in their statement, they talked all about inflation, not seeing inflation coming down. Inflation is sticky. They want to see inflation comfortably towards 2% before they consider cutting rates further, okay? The market has been pricing in the fact that the RBA will cut rates because of the problem they've got in terms of their biggest trading partner is China. China could be tariffed heavily for one, but for two, China could then be, China is suffering from slow economic growth, right? So For me right now, the Australian dollar has been sold off heavily because of the impacts of China and tariffs and potentially even the prices of metals being tariffed as well. Australia, a big mining nation. One thing that's quite interesting to me, though, is the fact that the RBA have always kind of kept interest rates higher. So, you know, if we start to see inflation uptick, I think if we see it miss to the upside, so let's say it comes in at 2.7, 2.8, I actually think a strong Aussie dollar makes sense at that point. Okay, so definitely want to keep an eye on here. Going through the rest of the week then, Thursday, GDP data, unemployment claims, always very important to keep your eye on unemployment claims. It's kind of your leading indicator into the unemployment situation in the US. But Tokyo core CPI, right? Been talking a lot about how the Bank of Japan are potentially hiking interest rates this year. We need to see this number continue to uptick. But I'm going to talk a little bit deeper about the Japanese yen today, because there's some really interesting commitment of trader reports data coming out. So I want to show you that as well. Again, retail sales, if that continues to move higher as well, it kind of shows you the demand within the Japanese economy. CPI in Germany, going to be important. Big one at the end of the week, core PCE price index. This is the preferred inflation metric that the Federal Reserve look at. So tells you a lot. You need to kind of keep an eye on that as well. A couple of questions just coming through. Right, guy, good afternoon. Hope you're well. Did you lose weight? Yeah, I have lost weight. Yeah, thank you for noticing. Thank you. Yeah, I'm actually down 4 stone from last year. So yeah, thank you for noticing. Been working hard in the gym. Vincent, would you buy Aussie CAD or sell Euro Aussie? Well, let's get on to the you know, the highlighter for us really. Let's get on to the strength and weakness table. Okay, because this is something that we look at in terms of looking at sort of how the currencies are shaping up against each other. Okay, so would you buy Aussie CAD or sell Euro Aus? I mean, for one, Euro is starting to get a little bit weaker in terms of currency strength and weakness. Aussie is technically at +4, right? So in theory, I like the idea of Euro Aussie. However, the Euro's going through that sort of political headwind at the moment. You know, if you look across what's weaker, you know, you got CAD that's gone from +5 to 0. So that's a weaker CAD there. So I would probably more on the side of Aussie CAD than I would be on Euro Aussie. And you know, I have both of them on the currency strength meter this week, which I'm sure you have as well if you've created your own. But when I look at sort of the kind of metrics then that I use to create the currency heat map, Euro Aussie kind of draws a blank for me in terms of the conditions around that market, right? And we can go into this in a little bit more detail. But yeah, Euro Aussie for me is not really at that point. So let's have just a quick flick over to Euro Aus and see where it is. And I mean, you can kind of see already that Euro Aussie is pushing back to the upside here. It kind of found support back down at this 164 low, and then has continued to rally. So I think, you know, if you look at it when price gets to this high, and if you start to see sort of a rebound in and around this area, so let's say you go to your hourly chart at this point and you start to see that the price kind of comes in, starts to then change trend, maybe there's a condition there where you could look to sell Euro Aussie on a very, very short term scale. But you know, right now it looks like this market's finding some positivity. Maybe, you know, we've kind of got this little sort of trading range starting to develop on the daily chart right now. So I'd watch it to see how it kind of comes into this kind of open and closing area that we had back in 13th and 14th of Feb. If we start to sort of reject in there, it could show us that we are starting to push back to the downside. But, you know, if we go flip that over to sort of Aussie CAD, Aussie CAD just looks more bullish to me. I know that sounds silly, but, you know, I talk about sort of retracement phases a lot and secondary phases and how aggressive those secondary phases are, that doesn't look like there's a lot of selling going on here, right? There was a bit of a consolidation. Buyers came from that consolidation, so there must be a lot of volume down here. But on this pullback, you know, if sellers were really trying to get involved, especially at this kind of high, that gap high, if sellers were really going to get involved at that point, you'd see sort of big momentum behind it. We're not really seeing that right now. So I actually prefer more the Aussie CAD situation. But look at the 4-hour time frame. You know, there was a nice sort of pattern there. Market broke out, has come back down, retested that now. So, you know, got this other kind of consolidation, haven't we? I think if we see a breakout of that, I'd be leaning more towards a bit of upside here. I mean, look at that. Price broke straight through that low. Classic sort of reversal setup there, where you get the close below, but then price comes back quite quickly, pushes back, closes back above the lows there. So yeah, I think, you know, this is obviously an area where price has been kind of struggling to get through recently. So we'll just zoom into that somewhere in here, right? So I think if you clear that, close above that, I think that opens the door for a move back up to at least these highs and beyond that. So yeah, just to answer your question, you know, Aussie CAD looks like it's got sort of legs to go a little bit higher, perhaps into the sort of 91 handle, maybe into the 92 handle, whereas Euro Aussie just looks like it's approaching those highs again. So that's my kind of feedback on those two markets. But let's flip back to this then. So when I was looking at sort of the currency pairs and the heat map and kind of where I would be positioning myself going into this trading week, there wasn't a lot going on. I mean, I was looking to potentially get long pound US dollar. And I do quite like the idea of being long pound US dollar. It's just that price is quite close to a significant high. Same with Aussie. Quite like the idea of buying Aussie US dollar right now, but just not where it wants to be. Dollar yen, like I said, I'm a huge fan of selling dollar yen, and I have been selling Swiss yen fairly aggressively. I know you guys who are in the channel and in the live streams quite often, you'll see that, you know, we talked about Swiss yen quite a lot on the channel. I ended up selling it twice last week. Sold it in this area here. I then sold it on Friday as well, which I don't know if anybody has seen the video that I did on Friday on the channel. But basically, as we changed trend here and we had that sort of two closes below, I ended up getting short around this level here. Stop loss was above the high. And I literally just targeted the lows. I didn't want to, because it was a Friday and we were going into the weekend, I didn't want to get caught out with any kind of gaps anywhere, especially if we saw any kind of developments, you know, towards the war in Ukraine and things like that. So yeah, I basically got short here, ended up taking another 1.2 move out of that in terms of reward to risk. So good trading week last week, really, considering. Just basically been selling Swiss yen. But if we go over to dollar yen, you know, it's a really interesting market, and I'm going to break down to you sort of why I find this market so interesting. I want to be short this market. I really do. I think that from a fundamental perspective, we're starting to see certain things shaping up, and I do want to try and bring it on if I've got it up here, but I don't think I do. Let's just go to trading economics. Look, that's the headline for one, which we can kind of talk about. US 10-year yield falls below the December lows. Yields are falling in the US. If yields fall, it basically is a prerequisite that the US dollar is going to continue to follow that, right? So that's number one. But if I just go over to calendar here, I've just got the US up here at the moment, right? And I just want to kind of point out a few different fundamental sort of news events that have happened that are kind of leading me down the path of yes, the dollar's a lot weaker. And to be honest, the currency strength for me has been telling me that dollar is much weaker. It's just been hard to get the bias of US dollar bullishness out of my head recently. And the reason mainly because was the tariff situation and Donald Trump being in power. But how long does that last, right? Market is kind of woken up now to the fact that tariffs are more of a negotiation arm. He has said tariffs are going to be implemented, but the market's just kind of shrugged it off, in my opinion, right now. So maybe we've got to actually see some implementation of tariffs, not these reciprocal tariffs, because to me, reciprocal tariffs are just basically, you know, non-effective in a way of, you know, is that going to really make such a big difference? You basically, if someone puts a 10% tariff on you, you put a 10% tariff on back. What has changed? You know, I don't see what has changed in that scenario. So a couple of things that I wanted to point out, though. So one of those things was, obviously, we had a decrease in ISM services PMI, but first thing we've got to talk about is non-farm payroll. Okay, now, all things considering, you probably thought the last payroll's number was pretty good, especially in terms of the unemployment rate, and I'm pretty sure average hourly earnings kind of ticked higher a little bit. But there's going to be some developments in non-farm payrolls. Now, previous was 104, actual was 143. The previous to that was 307. To me, this number probably next month, and maybe even into March and April, are going to be much lower than this. Why? Well, the Department of Government Efficiency, which is run now by Elon Musk, they are looking to cut jobs in the government, essentially, right? So defense, they're looking at cutting jobs in, and basically across the government in the US, they're looking to cut a lot of jobs. That makes up a lot of the NFP report. So for me, if we're seeing a problem in the private sector, which may have been propped up by government jobs coming through, that's now not going to be helpful anymore, right? Because usually what you can see is that in the report, it'll be like, okay, so private sort of market jobs that are coming through, they have kind of stalled a little bit, but maybe there was 120,000 government jobs that were put out and placed, right? So it's always been a little bit skewed, because you can say, oh yeah, but everything's all fine, jobs numbers are doing great, blah, 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 but it's a lot of to do with the government backing. That's not going to happen over the next few months because they're slashing jobs in government roles. So non-farm payroll could be a tricky one going forward. We might even see the unemployment rate start to tick up as well. Another thing we want to point out, obviously core inflation has stayed a little bit higher. Okay, so that's not great. That's not great, which kind of gives the Fed the problem of keeping rates the same at the moment. But what I'm really interested in, or what I've seen the market start to react to most recently, is sort of consumer-based indicators. Okay, one was retail sales month on month. That shocked. I think the consensus was that it was going to be minus 0.1. So the consensus was it was going to be lower, but I don't think they expected it to be so low. Okay, so forecast was 0%. Low end consensus was minus 0.1. Actual was 0.9, down from 0.7. So that's quite a significant change in the direction of retail sales. Another thing that kind of stood out to me as well was the PPI as well. PPI coming in at 0.4%. Okay, so things that are kind of pointing towards sort of consumers, they're starting to come in a lot lower now. So, and to me, what is the most important thing in an economy is that consumers are spending. If consumers aren't spending, what's that going to happen? How's that going to relate to sort of supply and demand within an economy? Okay, it's not going to be great, is it? And then the Fed might have to be sort of forced to cut interest rates because demand is slowing. You know, you've had reports out of Walmart, right? Walmart, who are a consumer staple company, who usually actually perform pretty well in kind of recessions and things like that. They've come out and predicted that sales are going to fall by 3 or 4% over the next few months, possibly even the next year. So if a consumer staple is going to perform poorly, what does that tell you about consumer spending? That is considerable. Also coming up, we've got GDP growth rate, which has been pretty good in the US, up at 3.1%. Looks like it's going to come in a lot lower. So I think we're going to see a lot of dollar weakness starting to flow into the markets, especially if we do start to see, don't get me wrong, I think inflation numbers are probably going to stay pretty high. But I think if you start to see the retailer not purchasing goods, the demand starting to kind of fall away, that's then going to have a knock-on effect on inflation anyway. And, the supply and demand dynamics in the US. So I think the US for me is a market that I do want to try and sell personally. So I'm going to look to try and do that against some stronger currencies. The problem is, where are the stronger currencies? The only one that is really strong right now is the Japanese yen. So market broke that trend line. This is something that we spoke about towards the end of January, about if that happens, there could be some more downside to this market. Now we're at another kind of key point. This 149 area has been a key area for markets to trade from. So if that gets broken through, then I think the next stop for dollar yen is down towards the 140 spot 50 handle. And if we think about what's going on in Japan, it's almost like the opposite of what's going on in the US. So this makes sense. This makes sense to me. The only caveat I'm going to put on this right now, and you can take this as a two-way thing, because I like to look at the commitment of trader reports. I like to understand where hedge funds are positioning themselves, where are the commercials hedging X, Y, and Z. Now, if we look at the Japanese yen here, and we're just literally looking at the report, what I'm going to highlight to you is the changes over a week-to-week period on the Japanese yen. Okay, what you notice is that they just continue to buy into Japanese yen. Okay, we're at minus 29,400 contracts early January. Middle of Feb, we're at positive 60,000. That's net as well. So that's the difference between the long contracts and the short contracts. So we've kind of seen a significant change there as well. If I actually go, I think I can go a little bit further back than this and just click next date. So yeah, what you had was sort of December, they were kind of buying into Japanese yen, right? Then they started to sell. And then all of a sudden, January 14th was kind of the turnaround where you started to see hedge funds really kind of selling into the market, or buying Japanese yen, sorry. And that would have been this report here, okay? So where we started to see that significant change was in and around this area here. And since then, the market has continued to sort of decline when it comes to the reports. If we open this up a little bit, let's have a little look as well. What are the large speculators doing, who are hedge funds? They are now buying at levels of extreme. This was the last time we got to the extreme. Look what happened to yen futures. They dropped lower. Okay, so we've got to be a little bit careful. Now, don't get me wrong, commitment of traders absolutely suck at timing things. Okay, not very good at timing things at all. So just give that caveat. So we may still see price push up towards these highs before we see any kind of reaction. But we have to note that we are at this kind of other level of kind of resistance here for the Japanese yen futures. So you just need to inverse this for dollar yen, right? So dollar yen at that 149 handle is Japanese yen futures at these highs. So this area here for me is a point where we could start to see a bit of an impact from these reports, or we'll flush through them and the market will go to the next level. So these two next points for Japanese yen, I think, are going to be pretty crucial to what happens next. Now, if we look back in time as well, we can see that when contracts get to these levels as well, right, we can see sell-off, right? Sell-off, which would be in and around there. sell-off, right? Every time we kind of come up into these kind of levels, we get some kind of Japanese yen sell-off. Now, if you think about 2008, there was multiple times where you can see we kind of kept bouncing into that area, had nice little downward moves, right? This is the condition I think we're going into now, where we get a little bit of a pullback, then we get an extension again, a little bit of a pullback, extension again. The reason why is because we're actually in very similar conditions to those of 2008 when it comes to the Japanese yen. In terms of back in 2008, Bank of Japan were hiking interest rates, right? What was happening to the Japanese yen? It was getting stronger throughout that period. So that's where I think we're at. I think we're going to do something very similar here. I think we're going to see either a pullback coming in here or here, okay? And we'll see that break out and continue higher. That's just my opinion anyway. So I feel like that's where we're kind of at right now. Sorry, I can see a couple of questions in that I've just missed. Yeah, Ratish, you're right. I think NFP will take an Elon hit. Right, guy, I think the market's calling Trump's bluff. I agree. Innocent was long Kiwi US dollar. Okay, nice. Yeah, I can kind of see that. Yeah, Kiwi I'm not too fond of at the moment, but I don't mind that one. Vincent, it looks like the Swiss is getting some strength, or is it just a pullback? I think the Swiss is getting stronger, but it's getting stronger against the dollar, right? If you have a little look at the Swiss franc on a currency strength and weakness point of view, I've still got it down as -2. So I think across other assets, it's not doing so well. I mean, you can argue that, right, if I go and take a look at some Swiss pairs this week, yeah, we are starting to see a bit of Swiss strength. I mean, look at dollar Swiss breaking lower. I like dollar weakness anyway. I think, you know, the Swiss franc is just gaining from the back of that dollar weakness. Aussie Swiss is pushing lower as well. Market is starting to break through, so I can see where the Swiss franc is getting strength, but a lot of the Swiss franc pairs are in trading ranges. So, you know, I wouldn't be surprised if we saw this start to kind of break and sort of move back. I mean, pound as well is another one that seems to be kind of in a trading range at the minute. Kiwi Swiss also in that kind of trading range narrative as well. Swiss yen starting to pull back from these areas as well. So I think the Swiss franc, to be honest, is just getting a bit of a pullback. I'm struggling to be a buyer of the Swiss franc right now, considering the fact that they could be heading into negative interest rates. I think that makes a really good potential for hedge funds to get into sort of some kind of strong carry trade situation. So I don't see the big fascination of buying Swiss franc. I mean, from a immediate point of view, I can see it. I can see the strength there, but from sort of a mid to kind of long-term point of view on the Swiss franc, don't see big strength coming from that at the moment. I just think it's getting actually a big boost via the US dollar situation at the moment, personally anyway. I might be wrong. But yeah, that's the way I kind of see it at the moment. Irfan, hello. Took a long EU just after London Open today. Going okay so far. 20 pips up. Nice. Yeah, I mean, I like the idea of being a buyer of euro. I like the idea of being a buyer of pound as well. You know, these two markets to me look pretty good. We're just approaching these kind of big levels of resistance. I was actually short euro last week. It was in this little area here. The market kept pushing down and down and down, and I was like, great. So I just kept dragging my stop loss down. Ended up getting taken out on this little push here. So yeah, that was a nice little move, kind of taking advantage of this sort of daily level of resistance at that point. So I do feel though that this market is more bullish than bearish right now. We've broken above the 50-day moving average, it was a positive for me. When you look at the weekly chart, we're in that sort of pullback phase there. You know, look at it from a monthly perspective as well. We're starting to push back. I mean, a lot of calls have been for euro parity this year, and I just think, you know, when we see a lot of those calls, you know, how's the market going to be impacted by that? I do think that euro dollar downside, you know, from if someone's going to say, where's it going to be at the end of the year? I probably would be more kind of on the side of the euro dollar is going to be lower. But talking about trading from week to week right now, I like upside. I like a move into that 1.06 handle. For me, I think that could be a good sort of level of resistance. It's these kind of weekly highs that formed as well. So yeah, we just got to really keep an eye on how the market is viewing the US dollar, right? Because let's face it, euro dollar is the dollar index. And to me, you know, dollar is suffering at the moment. And if we go take a look at bond yields right now, you got the 30-year yield, so what they consider the long end, they're moving lower. 10-year is also moving lower, breaking through new lows now. The 2-year, which is the most sort of reactive to interest rate expectations, now coming in at 4.1%. So, you know, starting to kind of break this move down. If we go take a look at bonds, which we were talking about, I don't know, end of last year, I think, you know, we were talking about this breakout situation, but I actually think it was up here. And we were looking at bonds. We were looking at this kind of breakout that was forming, and we talked about if bonds could sustain above, you know, these kind of levels, then it would have been nice for it to kind of, you know, push higher, and that would have caused the yields to sell off. And we were just very early to that move by the looks of it. You know, commitment of trader reports were showing at the time that there was a heavy sort of long position on T-bonds, and we started to get the push, but then they just gave that up quite quickly, and we started to see another kind of leg higher. So again, commitment of traders kind of give you a little bit of an eye, but they suck at timing. I don't know what the T-bonds are on at the moment when it looks at the commitment of trader reports, I must admit. So maybe we can have a quick look at what they're saying. But I know we were looking at the 5-year. Because I know they were short at levels that were, you know, in history. They were short at the biggest levels in history. And that was there, yeah. So that was back in sort of end of November, start of December, where we were looking at that potential breakout move. Contracts have remained pretty similar. We tried to break lower again, they kind of failed that. So now we're starting to see some buying coming back into place. So yeah, if bonds continue to move higher, that will drive yields lower. And if yields move lower, that will drive the US dollar lower as well. So I think a lot of things starting to point to, you know, a lower sort of US dollar right now. We can see that sort of the 10-year, 2-year sort of spread at the moment is pushing higher as well. So, you know, that means that people are more sort of invested in the long term again. So let's have a quick flick over to the stock markets, because we had quite an interesting move to the downside recently. I mean, if we take a look at the NASDAQ is really hurt right now, pushing lower considerably at the moment. So do I want to be a buyer of the stock markets is the question. Yes, but I'm not going to buy them where they're at. I don't think it's good value right now. If we get down towards this kind of weekly lows, let me just add an alert there for NASDAQ. I think if I get down towards this area on the NASDAQ, then I'm going to look to potentially be a buyer there. But I don't see where the buy is going to come from right now. Very similar to the S&P 500 as well. Just kind of goes to the weekly chart. I think if you were going to ask me, you know, if I was putting my trader cap on, where do I want to be long? You know, down towards these kind of lows here makes a lot of sense. So I'm going to be waiting for kind of stock markets to pull back into those points there. Trade 2020, I've just covered dollar yen quite extensively about 10 minutes ago, 20, maybe even 20 minutes ago. So maybe go back into that little bit of the stream to have a little look at that one. I did a really in-depth kind of look into the US dollar, Japanese yen, and the commitment to trade reports. So hopefully that will help. Are you looking at silver longs again? Gold looks even better. Nice H4 pins developing in gold. Yeah, I think what I'm looking at right now for gold and silver especially, because I do feel that, you know, I talked about the gold silver ratio recently, and if you actually overlay silver on here, right, and pop into new right scale, okay, typically when you get sort of a move up into the high here, this kind of, let me just turn that back to regular, around this 92 area, silver gets a nice little bid, right, and we get a nice little kind of push up there, just to kind of show you that. We grab a thingy here. So most recently here, here, and here, right? Even up into these kind of points before. So silver usually gets a nice little bid, because basically what it's telling me is that gold is overvalued against the price of silver, so investors can go and chuck into kind of silver instead. So for me, I still quite like the narrative of silver long. The only problem I've got right now is if I go back up to silver, right, and we have a little look at the compare tool with the likes of the S&P 500. Typically, when we get sort of a little bit of downside in the S&P, you can see some sell-off in silver as well. A little bit downside in the S&P. Silver also moves down. We had that recent kind of downside here. This is a weekly chart, by the way. And you saw that kind of downside as well in silver, because usually the initial sort of downside in the stock markets can lead to sort of fear, and that fear can lead to profit taking across other assets, such as silver, such as gold, which have performed pretty well. So what I would really like to see is the stock market start to turn a little bit. I mean, this is a good level. It's a good level. I've marked this out myself. This would be a nice little level, I feel, to be sort of a buyer back into the market of silver. But I would like to see the stock markets turn as well. I think if the market starts to then go sort of risk on again, I think silver prices will start climbing back to the upside. Ultimately, you know, if you're looking at it from a technical point of view, you're in a little downtrend here. So if that changes, let's say it comes to 31.50 and then that breaks, you know, then I'd be a little bit more interested. And by that time, you might see that kind of little rebound on the stock markets, because, you know, there's a lot of other things going on as well. You know, in the Fed meeting minutes last week, there was the discussion around pausing quantitative tightening, right? So you got QE and QT. Now, if they pause quantitative tightening, is that going to influence more liquidity in the market? If liquidity comes back into the market, then it's good for stock markets, good for the likes of commodities, I feel, in terms of silver and gold. So I would be definitely on the side of being a buyer of this market. I just want to see the market kind of go back, sort of risk on a little bit. And that will be for me to kind of, you know, keep an eye on that and watch to see if we can get a little bit more upside. So I agree, nice little kind of pins in there. He's saying for gold as well, and I do think gold is going to make that rush to, you know, 3K. I do think that is going to happen. It's just, where do you see good value in it? I'm looking at gold right now and I'm thinking, where am I going to put my stop losses? You know, in the way really of any kind of sort of decent opportunity, I think there. But yeah, I do think gold's going to make 3,000, but by proxy of that, I think silver's going to make 34. And I think when I'm looking at kind of reward to risk ratio, let's say you like it a lot, right? And you want to buy, just theoretically, okay? This isn't a real order, but just theoretically. Where do you want to target? And there you go, Ratish. I was just in your message there. So I think you want to target $34 initially, right? The why, because you got these kind of daily levels there. Maybe even push towards 34.50 if we're going to be quite aggressive with that. ultimately, I think silver prices could, I'll just go to the weekly chart, could be back up towards sort of, you know, your $35. Do I say $43 in the future? Maybe. You have to be really the right conditions here. I think China would have to really open up for silver to be so bullish in that sense. But you know, I think 34.50 is a good sort of number to go and look for right now. If you know, this is a number I've been targeting for opportunities. I've just been getting out of moves, and it turns out I've been kind of getting out of the right moments, which is lucky. But looking at the sort of time, you know, 4-hour chart here, my safe kind of stop loss right now is down here. Let me just look at the ATR. Let's go to the daily chart. Let's look at the daily ATR. 731. So you're looking at a stop loss that if you were to go long, that would be sort of ATR on your stop loss. That's not beneath the lows, which would make me a little bit funky on that. So I'd need to see, got $31 there. I'd probably say my stop loss needs to be around $30.90. Now, that still gives us a good reward to risk ratio, you know, like a 2-to-1 reward to risk. But the closer I can try and get to that stop loss, the better it will be in terms of reward to risk. So yeah, I kind of like 31.50 as an entry, but again, my conditions would have to line up. My strategy would have to line up at that point. I'd need to see silver come into this level, and I'd need to see a bounce there. I'd need to see some kind of break and rejection at that point. So 34.50, I think, is a good sort of target zone. I think that would kind of line up with $3,000 pretty well on gold. Okay, and this is a nice little daily pullback, right? You've got this kind of secondary phase here. So when you think about phases in the market, you've got your primary phase, secondary phase, primary, secondary, primary, secondary, primary, secondary. What I like to look for is where that secondary phase ends and when the primary phase begins. And a big tell of that is those lower time frame changes of trend. So yeah, I'll be looking at sort of the 4-hour, the 1 hour, and I'll be looking for that change in trend, okay, essentially on those levels before even considering being long there on silver. Vincent, how would you take dollar yen short? There's a couple of ways I'd do it. So it depends if I get a pullback or not. Ideally, I would love to be short around 155, 156 or 158.50 just because of the weekly chart, right? Good level of resistance here. If anything, you could say that's like a left shoulder head. Could that be an area where a right shoulder comes into play, right? Something like that. So this makes a lot of sense to me. I also like this kind of 158 area as well. Nice resistance where we saw sort of the move kind of kick off. That would be a nice area. But are we going to get it? That's the problem. I don't know whether we're going to get it. So while we're at support, not bothered about taking a move here. I don't think you've got good risk reward ratio. I think that's not really a great move. If price breaks through here and then retest that, that's better because we've got a stop that can be above that resistance zone. So, you know, then we can go and try and target 140.50. The only other option I thought about was what if price pulls back into this kind of area here, or like, you know, this kind of pause point, because I guarantee there's volume around there because that was consolidation before a breakout. So my only other thought was if price can make it back to 152, and let's say we really struggle here, market just really, really struggles, then, you know, I'd be happily looking for kind of opportunities to the downside around 152 as well. So I think if I get in anywhere around there, though, it's going to be a 0.25 to 0.5 move in terms of risk. You know, 155, I don't mind looking at sort of 0.75, maybe even 1% risk of an account at that point, because I think that's a good, strong level. So there are ways and means to do it. It's just whether we get those pullbacks or not. I think to try and think that price is going to come back to 158 might be a big ask, especially the way the US dollar is performing at the moment. So yeah, I think that's a big ask. I don't think 155 is a big ask. I think that's actually quite a reasonable area to consider. Obviously, that's more favourable. You get the 50 moving average daily through there as well. Nice little rejection. I quite like that. Otherwise, I'll be waiting for a break and retest, because you could try and get short here. I just don't know how you can maximize your risk reward, because there's been so many times where price comes to that low and then just, you know, rebounds and trades higher. So yeah, right guy likes the 152. Yeah, around there. You know, I don't mind that move there. You look at the 4-hour chart, you can see it's that kind of consolidation before price broke out. So yeah, I don't mind that either. To be honest, I'd like to see that kind of, you know, whatever, get kind of like a boom, 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 break up into 152, then you get a nice little break and retest sort of opportunity around there. So yeah, I'd say dollar yen at that point would be pretty good. It's like if you look across all yen pairs, to be honest, you know, Aussie yen at support, CAD yen breaking support. So maybe CAD yen is actually a bit more of a viable option if you wait for that kind of breakdown to continue. Euro yen's not really doing anything, kind of struggling, kind of shows you the strength in euro at the moment. Same with the pound. Swiss yen, I think, you know, I really like Swiss yen short. I did trade this lower from here down to here before, and you know, the market is rejecting again. I think the circumstances are a little bit different. We're starting to get kind of daily buyers coming back in to the market there. Oil, I mean, look at oil. Oil looks like it's going to break down to $67. I've not traded this move. Although there was a COT short signal up here, I have not traded any of that move to the downside. I was kind of eyeing up a potential short at $73, these kind of daily highs, but price didn't actually get there in the end. Kind of came very, very close to the sort of level I was looking to get in. Yeah, that would have been a nice little sort of breakout there on the Friday for a bit of a move down. So yeah, unfortunately didn't get into that move. You know, you can see this kind of 4-hour nice little kind of trend that was created here that then got broken and breached, and the market has continued lower. So unfortunately didn't get anything there, but that would have been a nice trade. I think $68 looks pretty good on that one. Right, guy, you're in oil now, downside, like it. Yeah, like it. Yeah, there was I don't know why I haven't traded this, to be honest. I mean, everything was kind of pointing. There was a really nice COT signal short here, and I didn't take it. And look at that, market has pulled back ever since. So you even got Trump saying, you know, wants to increase production. OPEC, they've come out and backed that, really, that increase in production. So usually an increase in production usually sees downsides. So, you know, maybe I'll try and catch a little bit if I'm feeling a little bit risk averse to the downside there. So keep an eye on that one. Keep an eye on that one. Volatility index is up today. Look at that, 6.4% up today. Stock's going to be lower on that. I mean, this is a great little move at the moment. Actually, Blueberry have just added the VIX back to the platform. So if you're interested in the VIX with Blueberry, then they've just added it back to the platform, as well as the US dollar index as well. Euro dollar index, same thing. So, you know, don't worry too much about that one. But yeah, euro dollar starting to push a little bit as well. Same with pound. I think if pound can breach this 127 handle, you know, 128s look very, very approachable. Maybe even the 1.3s, you know. Data out the UK has not actually been that bad. You know, I know there's a lot of story around growth and the lack of growth, but previous GDP actually showed quite strong growth. I was quite surprised, actually. I went out for the past couple of weekends, actually, and it's very busy around my local area in terms of just kind of people out and about. And that's quite interesting to me. I like to kind of get out, see the world, see what the world's doing. It's the best way to kind of look at how are people going out? Are they buying drinks? Are they is there a lot of people? There's big groups out. Things like that make a big difference. If there's a lot of individuals out in terms of just kind of couples and things like that, then it's not usually a great sign. But when you've got loads of people out and about, I mean, one pub I went into was just chock-a-block. It's just. But there's a lot of sport going on in the UK at the moment. I don't know if anybody follows the Six Nations, but a lot of Six Nations has been on recently. That's a big draw of big crowds to pubs to watch those games. Obviously, there's been a lot of Premier League football going on as well, so that's obviously a big draw to pubs and things like that. But yeah, nice little upside to the pound there. One market I was quite interested in, but that's faded a little bit for me now, was Aussie Kiwi upside. It's hard when you're trying to predict a sort of move in the market because things can change quite quickly. I quite like the idea of buying if we can break out of this area here. If we break above 1.12, I don't mind looking for longs up into 114. This was for me a trade if you were looking to try and trade the difference between sort of the RBA and the RBNZ. But those kind of retail figures out of New Zealand last night kind of prompted a little bit of New Zealand dollar strength. So keeping an eye on this at the moment. I had a little look at the 4 hour. I can see we're consolidating here. Nice little break of that could be a bit of upside in the short term, but a break of 112, maybe we'll see some upside there. Right, guys, waiting for a retest of S&P at the 6100 level, but doesn't look like that will happen. Let's have a look. Oh, you're looking to short 6100, right? That kind of sell off there. I mean, it depends, right? I think if you are trying to trade the VIX right now, what I'd be looking at. So we're coming into. So obviously we've had the US Open. We've got data coming up in 2 minutes, so we'll kind of jump on and have a little look at that. But if you think about it, the S&P 500, what I like to do is look at the VIX. If the volatility index starts selling off here, you want to be looking at potentially being a buyer of the S&P. These are great examples of that recently, and I actually traded the S&P. I was buying the S&P on these moves because if you just compare wherever that may be. Here we go. Let's just format that. Okay, so you can see when you get that kind of strong spike in the VIX, you get that kind of downside in the S&P, but as soon as that starts to come off, nice little trend that develops to the upside. Again, volatility kicks in. It was dropping, and this was kind of like every session. There was like a big spike in the VIX, and then the VIX would then kind of tail off again. S&P had a really nice kind of bullish move. Now you've got a similar move again. Market has spiked, S&P is down. If we start to see volatility index start rolling over, maybe come back towards these low levels here, back towards that kind of low down there, then that could be fairly positive for the S&P 500. So yeah, I'd be keeping an eye on that. I'd be looking at my volatility index starting to kind of break down. If it does, then S&P 500 will likely trade back up to the upside there, the 4 hour chart. So it'd be a nice potential sort of daily move going on at that point. But yeah, I'll be keeping an eye on the VIX, to be honest. If we do start to see that roll off, then yeah, great. If not, then the VIX could be back up towards, this kind of 25s. 30 levels. I mean, if it's gone 30, we're probably going to see quite a big drop in the stock market if it gets anywhere near sort of 30. So, I mean, NASDAQ is taking another move to the downside. Yes, please look into short. You're very keen on the short there. Very keen on the short. I think the data might have come out. Let's have a quick look at what's going on in terms of data. Let me just put this on a 15-minute chart on the NASDAQ, and then maybe we can see if the data is pushing prices lower here. So let's just hit refresh on the economic calendar. CB consumer confidence. Again, look at that. 98.3. Forecast was 102.7. So another kind of drop here in consumer confidence, right? Remember, leading indicator of consumer spending, okay? And it's down 98.3. So no wonder stocks are having a little downside move there. No wonder. VIX now climbing to 20.38 as well, so up 7.43%. So yeah, no, I'm not shocked by that. I'm not shocked by that. But again, just keep an eye on it. If we get a nice little punch down to this 20,000 level, then maybe it could be good. You know, because really speaking, if the Fed put a pause on QT, that should be positive stocks. That should be positive stocks. The only downside, obviously, is the consumer spending arm of it. But you know, if we do see that demand start to weaken in the economy significantly, then the Fed will have to do something about rates. Let's see if that changes anything from the CME Fed Watch tool. Let's see if that changes anything for us. So no change. Yeah, 95.5% chance of no change in the next meeting. Does that change anything for May? So 72% change. Yeah, 0% change right now on the day. I mean, it was at 14.1% a week ago. Now it's at 26.6, 26.3. So it's kind of chopping up and down a little bit of a cut coming in May. June is where they're pricing in a cut. June is where they're pricing in a cut. I think that might change slightly. If yields continue to come down, I think that will change. And there's a lot of time between now and the 19th of March. So that'll be something to keep your eye on as well going forward. Dollar's gaining a little bit of strength off the back of this data drop, though. Although we're starting to see this downside move, you know, in stocks, that's giving the dollar a little bit of strength. If you look at euro dollar right now, let's go to the hourly chart here. Starting to see a little bit of sort of selling coming in towards this kind of 105 handle right now, but we'll see if that lasts or not. You know, if it does start to push back down, then you know there still could be a good chance of the market moving higher here, but we'll keep an eye on that. Euro, I mean, look at the euro, right? When I talk about sort of euro positivity around the election, it's climbing against the Australian dollar, climbing against the New Zealand dollar, a little bit better than the pound right now. Euro CAD flying higher. The only ones it's down against at the minute is the Swiss franc and the Japanese yen, because they're two strong currencies. It's even stronger than the Norwegian kroner at the moment, which could be a good play. Euro knock long might not be bad. Just in terms of like the sort of oil play as well. If oil keeps moving lower, then that could be negative Norwegian kroner in the short term. Euro's getting a little bit of a boost from that political stability. So Euro knock upside, it might not be a bad little move there. So yeah, we'll see what happens in the market. Right, we've been running just over an hour then, guys. That's how long I like to kind of run these sessions for. I'm gonna leave it there. I really hope you enjoyed this session. I hope you learned something new. I hope you gained some confidence from it in your own trading. But yeah, appreciate you all here. Appreciate you all asking comments and giving you comments and asking questions and stuff. So I'm going to leave it there, though. Thank you for joining me this week, and I will speak to you very, very soon. Have a great rest of your trading day. And, you know, if you have any comments or questions, leave them in the description, and I'll get back to you at some point. So thank you all. See you later. If you could leave the stream a like, I'd really appreciate it. So thank you. Have a good trading day. Bye.